Thank you. Thank you for that. Okay, so I said, even the last class here, we had passed this part, isn't it? So this one is just a recap of the last class, isn't it? So you must remove also intergroup dividends, isn't it? So remember H, the parent company had 80% of the holding company. So it means 80% of the dividends here are intergroup dividends, isn't it? So minus 0.8. So here it would be 0.8. You multiply by the 40, isn't it? And maybe you can put this one in bracket, the 0.8 minus 40, isn't it? So you find that it is 58, isn't it? You can check the formula up here. It is the holding company plus the subsidiary company minus intergroup dividends. I've told you, because H holds 80% of the subsidiary S, isn't it? So 80% of the proposed dividends will be intergroup. That adjustment we've already made, isn't it? Then now you go to additional information, isn't it? So after you present this, like these two are always guaranteed 3 marks, isn't it? They don't have any adjustment. Then we go, so we start with the goodwill, obviously. So here, we've been told H acquired 80% of S Limited when the retained earnings of S Limited were 20 million. The fair value of non-controlling interest is 80%. So when we've been given the fair value, it means we will be doing a full goodwill method, isn't it? Full method, isn't it? So under full method, we have the parent, isn't it? And we have the NCI. We have the NCI, isn't it? So here the parent, will be, and the one who is not muted. Okay, I think I've muted all, so you can use the chat. Okay, yes, now we are recording, isn't it? We have the parent and the NCI, isn't it? Here we have the purchase consideration, isn't it? Here we have fair value of NCI, isn't it? The same thing, just that what we are doing, isn't it? So investment in S is the purchase consideration here, the 300, isn't it? Equal the 300, isn't it? Then in the additional information, we've been told the fair value of non-controlling interest was 80 million, isn't it? And you check, so the question was presented in millions, isn't it? So the NCI part will be 80, isn't it? This is what we are doing. Then you less net assets, isn't it? So for net assets, I'll combine everything. So equal sign, isn't it? So the net assets, isn't it? So this acquired 80%, isn't it? You multiply by, you multiply by, you open your bracket, isn't it? The share premium, the share capital, I mean, plus the share premium, plus pre-acquisition retained earnings, which we've been told here it was 20 when the retained earnings were 20, isn't it? Plus 20. Then plus, you check the additional information if there was any fair value adjustment, isn't it? So you check, we have only 7 additional information. So on additional information number 4, we've been told the fair value of S Limited was in excess by 30 million, isn't it? So this one will result into revaluation reserve, isn't it? So plus 30. Then you close your brackets, isn't it? Enter. Then here, equal. So rather, because here, this was the NCI, isn't it? We can just even copy the formula instead of repeating the whole thing. Control C, isn't it? Then you press escape. Then you come here, Control V, isn't it? Then you put equal sign in front of the formula. Then you change the percentage because NCI is 20%, isn't it? So here you'll find gross goodwill. We'll just write goodwill like just, so we have just simplified the way we are doing, isn't it? So it will be the purchase consideration minus, isn't it? And it will be the same thing, the fair value minus, isn't it? We'll find that the goodwill is 20 and 30, isn't it? Then we have the one now for partial method, isn't it? The joint venture, partial goodwill, isn't it? Now the joint venture, isn't it? So for the joint venture, we'll go direct equals the purchase consideration. You can see it is 250 here, minus. So you look at the joint venture head, 50%, isn't it? So 0.5. Then you multiply by, you open your brackets, isn't it? The share capital plus the share premium plus pre-acquisition retained earnings, which was 100, isn't it? You close your bracket, control enter, isn't it? Control backspace to jump to the active set. Remember here we have already done, so maybe I'll do this way. Alt HBP for a top border, isn't it? So, and this one is the partial goodwill in the joint venture, isn't it? So we look if the information has impairment, isn't it? Then we've been told here, the goodwill in S Limited and J Limited is estimated to have impaired by 8 million and 12 million respectively, isn't it? So in S, it has impaired by, so I can add here impairment. Isn't it? This one has impaired by 8 and this one has impaired by 12, isn't it? So the total here, I'll do alt equals, control enter, isn't it? Then I'll be lessing, isn't it? So I can take this one, control X, I bring it here, control V, isn't it? Then I can also take these two, control X, I bring them here, isn't it? Control V, but just remember, so that when I minus, we go faster, equal this one minus this one, isn't it? Control enter, then I do this way. I come here, alt equals, control enter, control bolt, isn't it? So this one is the goodwill minus impairment, isn't it? This is now the net goodwill. Are you with me, isn't it? Net goodwill, isn't it? So the net goodwill will take it there, the 70, isn't it? Then we continue with additional information. So this one you can put it in a box, alt HBT, isn't it? Then we'll go with the question. So we have already done the 50. So this one we will have to do investment in joint venture, isn't it? Yes, investment in joint venture. So the good thing of presenting is that we have already got some marks. So the joint venture, we must do the equity method. Sorry, here remember in our question, we had already been provided with the, the impairment in the joint venture, isn't it? Maybe I just show you the equity method. It is the cost plus share of post acquisition profit reserves, then we less impairment, isn't it? Then we find the net investment in joint venture, isn't it? So we are here. So the cost, sorry for this one. So I'll delete because here you see the good thing of cell referencing, because if I delete here, it will automatically reflect here, isn't it? it will automatically reflect here. So equal, we have, now we are computing the, let me just write here so that that one is goodwill, it is written. So investment in joint venture. Isn't it? So you can go directly or go with the formulas, but for exam purposes, I suggest you go directly, isn't it? But because you are learning, so cost, isn't it? Share of okay, the Zoom logged out, and then so we are back, isn't it? So I think now I'm audible. That one, thank you for that. Again, let me just wrap here, isn't it? So we are saying you add the share of acquisition, earnings, dividend, and reserves, isn't it? So here we have retained earnings, isn't it? 0.5, the share, isn't it? You multiply by, you open your bracket, 100, the 120 minus the pre-acquisition, which was 100, isn't it? Then you close your bracket. Then we also have dividends, isn't it? So dividends, it will be equal. So the dividends payable here, it was 20, isn't it? So 0.5, then you multiply by the 20, isn't it? Then you less impairment. So impairment, we were told it was 12, isn't it? Then I'll get the sum here now, sum press tab because the impairment I've already entered in it as a negative, isn't it? Control enter, isn't it? So investment in joint venture, I'll do Alt HB T, isn't it? So investment in joint venture here, I link it, isn't it? That way, isn't it? And I think this. So here we had no partial goodwill, isn't it? We only had the two, so maybe I'll make them a little bit cleaner, isn't it? So the total goodwill amount, it will be equals to this one plus this one here, just making it clean, isn't it? So control bolt. So I'll send the file. So this one is this one plus this one. Then we have impairments here. Isn't it? So remember here we have so the goodwill here, the impairment we've been told it was 8, isn't it? So this is what I was forgetting. We have the impairment for NCI and also impairment for the parent, isn't it? They both incurred impairment and the impairment was 8. So the parent will take, you multiply by 0.8, isn't it? The parent will take 80% of the 8, while the NCI will take the rest, isn't it? 8 minus the answer, isn't it? Will take the rest. The NCI will take the rest. So here, just the same thing, just the same, equal this one minus this one, isn't it? Isn't it? Alt HBP, isn't it? Then we find that the net goodwill that will come here to be this one plus this one, isn't it? The same thing just. Then so we continue. So we have already done the investment in joint venture, isn't it? Then we continue with the additional information. So we've talked of this one, we've talked of this one. So we come to this one, number 4, which says the fair value of S Limited was in excess by 30 million as on acquisition, isn't it? This one results into revaluation, isn't it? So here, revaluation, $30, isn't it? It was in excess by 30 million, isn't it? So remember first, what you do when you write an adjustment here, you adjust here first, isn't it? Equal so plus 30, isn't it? Plus revaluation of which we add to PPE, isn't it? Then this revaluation will result into depreciation and a charge, isn't it? Because we never charge them. So it will result into depreciation and a charge. Isn't it? So we go back to the additional information. So the fair value and the equipment was had a remaining useful life of 5 years, isn't it? It means we will do straight line depreciation, isn't it? So equal this one divided by 5, isn't it? Divide by 5, we get 6. Now, remember, like this 6, isn't it? This was on when it was being acquired, isn't it? On the acquisition, because was the access on the acquisition. So you check when was it acquired, isn't it? The question didn't have the date. Okay, let me just check. So it was acquired 2 years ago. That's what they are saying here. I think 2 years ago, isn't it? This one was acquired in 2011 and we are doing in 2013. Sorry for the for the mishap in the question. The question actually missed when was the subsidiary acquired, but now I'll send a more fixed one. So it was acquired 2 years ago, isn't it? So the depreciation will be by 2 years. Do not be just when it was acquired, isn't it? It will be times 2 here, equal the 6 you multiply by 2, isn't it? To find out 12, the depreciation undercharge. So depreciation undercharge is less from PPE, isn't it? So minus the 12, isn't it? Or you can link it directly so that when you make a change, it makes a direct change, isn't it? So that is PPE. Then we'll proceed again. So the depreciation, we've talked of it. So we've finished on this one, isn't it? Then we have unrealized profit on S Limited sold goods to H Limited at a markup of 33.33%, isn't it? A third, half of the goods still remained, isn't it? Half of the goods still remain. So here, maybe I'll bold this RHBT. Then we go to unrealized profit on closing stock, isn't it? So equal, you must change that into margin, isn't it? You must change that into margin. Then we multiply by half of the goods remained, isn't it? Then you multiply by the amount of 80, isn't it? Of 80. We'll find that it is 10 here. So unrealized profit on closing stock here, this one, because we just have the statement of financial position, it is less on inventories, isn't it? You make the adjustment as you go, because you can, maybe the adjustment required is only one, isn't it? And you'll be getting the mark, isn't it? So you less inventories, then do Alt H B T, isn't it? Then I go back to the additional information. Here, they are saying H Limited sold equipment to S Limited for shillings 150 million, marked up at 50%. The equipment depreciates at 20%, so it will result into UPFA, isn't it? Unrealized profit on sale of fixed assets, isn't it? Unrealized profit on sale of fixed asset equal. So it was 150 at a markup cost of. So you change that into margin, so it will be a third, isn't it? So you just take the transfer value times the margin, isn't it? You get the UPFA. Then UPFA results into depreciation. Overcharge, isn't it? Because we overcharged our assets, we included the UPFA. So equal this one, you multiply by 20%, isn't it? You'll find that it is 10. So maybe I'll widen here. And Alt HBT, isn't it? So here, remember, UPFA we less from our assets, isn't it? So minus the 50. Then depreciation overcharge we add, isn't it? Plus the 50, isn't it? Enter. Isn't it? I think there we finished on PPE. Then another thing, depreciation overcharge also will come under the statement of profit and loss, isn't it? It just affects this one and retained earnings, of which retained earnings we will do, isn't it? So we will go to the additional information next. So H limited or S limited 20 million intergroup balance, isn't it? Intergroup balance 20. Isn't it? So this one is less from the payables. So you come to payables here, you less the 20. You go to receivables also, you less the 20. Isn't it? You less the 20 there and you also less the 20 here. Isn't it? Then I think from there, we have finished on these ones, isn't it? I'll do alt equals, I'll just add all of them to total assets. So when the cursor turns black there, control enter, control bold. Isn't it? I just add all of them to total assets. Then what? So here we are just remaining with retained earnings and NCI, isn't it? Of which we will do NCI, isn't it? So I think maybe we can do it down here. I'll hold this Alt HBT, isn't it? So NCI account. So because it's an account, Alt HBR for a right border like that, isn't it? So maybe I'll remove the border up there, Alt HBN, then NCI account, isn't it? I'll merge the two, Alt HMC, or you can just merge the mouse here. Yes, I think someone has been answered there. 33 and a third is almost a third, isn't it? This way. Sorry. So I'll do equal marks. Not the date. So I can change from here. Number, isn't it? So it is almost, because this one is recurring, isn't it? If you add the decimals, you see they just go. So it's same as a third, isn't it? Same to a third, isn't it? Equal. Then it's just the same thing, isn't it? You can see here it is a third. For the one that was asking on the, sorry about last class, I had not researched fully on that. So let me, I'm on the chart, let me check this one. In full goodwill method, you are required to subtract the net assets directly and not 80% of the net assets. When we do this, then it's partial goodwill method. Kindly clarify. So it is the same thing, isn't it? Because we are learning, we just go back, isn't it? It's the same thing, isn't it? So here parent 300. So I'll press escape first so that we'll be back there later. Here, parent 300, isn't it? Fair value of fence here 80, isn't it? So you add first, you get the total, isn't it? This one plus this one, isn't it? This is the way we are doing it. Then share of net assets acquired, isn't it? We have, so let me just bring in, so maybe I call it SH, then share premium, then retained earnings, then revaluation reserve, isn't it? So share premium here equal 200, isn't it? Enter. The other one equal 100. isn't it? Then retained earnings, remember it is pre-acquisition, isn't it? Equal 20. Additional information number 1, isn't it here, 20. Then revaluation equal 30, isn't it? We have just done it here. So equal here, the purchase consideration minus the sum of the rest, isn't it? I press tab minus the sum of these ones, isn't it? Then I'll close my brackets, control enter, isn't it? Which is the same as 20 plus 10, isn't it? Control bold, isn't it? Then you come to impairment, which was 8, isn't it? When you less, it becomes 22, what we've taken here. This one is just when you are preparing the NCI account so that it becomes very easy for you. So we use this method so that it becomes very easy for you when you are preparing the NCI account, of which you are going to it next, isn't it? So the NCI account, we will start with the share capital, isn't it? So share capital, so I'll be writing SH, share premium, isn't it? Retained earnings, isn't it? Revaluation reserve. Those are first what they go, isn't it? So I can put here the percentage of NCI, which is 0.2, isn't it? So equal the share premium, which was 200, isn't it? Maybe you just go back and take it from the question, isn't it? Which was 200, you multiply by 20%, isn't it? So maybe I can put here a border, RHBP, so that I know where I started adding, isn't it? Share premium equal the share premium of NCI, you multiply by 20%, isn't it? Then we have the revaluation, isn't it? The retained earnings, isn't it? So equal the retained earnings of NCI, now this one here, then you multiply by 0.2, isn't it? Equal, then you have, so it was revalued at 30, isn't it? You multiply by 0.2 again also, isn't it? 6. Then another thing that comes here, it is goodwill, isn't it? Goodwill of NCI. So this is where we are, this is why we were separating, isn't it? Because here we will take the 10, goodwill of NCI, isn't it? Then another thing that comes here, it is depreciation overcharge, isn't it? So percentage of NCI equals, so this 1.2, you multiply by the depreciation overcharge, which was 10 here, isn't it? You find that it is 2. Then what else are we missing? I think they will go to the other side here, impairment, isn't it? Remember, that's why we are separating. Impairment, to check impairment of NCI, isn't it? 1.6, isn't it? Another thing, you check if the UPS was upstream or downstream, isn't it? Then it is S who sold to H. So percentage of UPS, isn't it? Because it's a downstream, isn't it? Equal, so 0.2, you multiply by the UPS, which was 10 here, isn't it? Then what else are we missing? Depreciation, undercharge. So equal 0.2, you multiply by the undercharge, which was 12, isn't it? Because there were 6 years, isn't it? Then I think we've finished. So here I'll do Alt equals, so remember I don't take the 0.2. From there, control enter, isn't it? Control bold, isn't it? So here, what will be taken to NCI to statement of profit and loss, isn't it? Equal this one here minus the sum, isn't it? Press tab, the sum of these. I close my brackets, control enter, isn't it? Control bold, isn't it? This one is what I take as NCI here, equal the 112, isn't it? Then, so here the NCI we finished. So maybe I can remove the down border. Alt HBN to remove the border there in the middle. Then I do Alt HBT. I lock the whole thing up, isn't it? So with NCI, isn't it? I can get the total here equal sum, press tab up to there, control enter, control bold, isn't it? So as I told you, for exam purposes, you use that one as the balancing figure minus this one here, isn't it? The zeros were many. So we find the retained earnings to be 410, isn't 418, isn't it? I'll delete that one there. Then maybe we create some retained earnings here just for confirmation. Then we go to the next question. Okay, let me, I'm on the chart. See, I told you, someone is asking markup and margin, isn't it? Like, in simple terms, what can I say? You just add, if it is a quarter or a half, you just add the one to the bottom, so it becomes a third. If it's a third, you add one to the bottom, it becomes a quarter, isn't it? Like, let me just say here, profit margin, isn't it? Isn't it? So it is profit over sales. Isn't it? Then profit markup equals to profit over cost, isn't it? Sorry, I'll remove the equal. That is profit over cost. Then now, if you have been given, remember, sales equals to profit plus cost, isn't it? Sales equals to, I think the third there was the one that was irrelevant. The third. See, like, what do, like, how do you write? Like, I don't know what to, like, how will I say? Like, you see, you cannot write, you see, 33 and the third. Just the same thing to 0.33. I don't know. So, like, they are third, like, just to do this, equal 10 divided by 3. or not that way. So 1 divided by 3, isn't it? And I want a number. Equal 1 divided by 3. Isn't it? You can see that it will not end. It doesn't end. Their third. Isn't it? Their third doesn't end. So that this is just to write 33 and a third. It's like writing 0.333333 that way. Are you getting it? So I don't know if there's a fraction function. Let me just try. There's no fraction function in Excel. So you can always try with this app here. You write a brief illustration of the function used, isn't it? You want to use, so change decimal to fraction. So you only have the decimal. So we don't have actually, we don't have one that we don't have to waste time on this one. So this one is like 33 and a third. You see, 1 divided by 3. Isn't it? So you add this 1 to this 3 to become a quarter here. Where was it? Here. A quarter. I think the point is 4. Wanjiru Mungai is saying 33 and a third is equals to 100 over 3. What is 100 over 3? Equals. Remember this one, the 100, you are making it as a percentage, isn't it? So this one times 100%. Or what are you saying? Just the same thing. Sorry. Just the same thing. I don't know what is your arguing point. Maybe we'll clarify with you later. Isn't it? Including the 100 there, we've already done as 100%, isn't it? 100 over 3. Yes, we shouldn't be spending like the minutes, all of them on the basics, isn't it? So I think we will proceed to the next question. Oh, we were to do the retained earnings, isn't it? So I'll delete here, but it's sometimes better to clarify so that someone understands, isn't it? No problem. If you have any question, just ask, isn't it? So retained earnings, group retained earnings, because we are learning, isn't it? So Alt HB L for left border there, isn't it? Group retained earnings. So I told you this group retained earnings has a lot of adjustment. So it is better sometimes you leave it as the balance, isn't it? So in the group retained earnings, first you'll have the H limited retained earnings, isn't it? I'll be writing RE for retained earnings so that will be faster a little bit, isn't it? Equal. So the retained earnings, it was 300, isn't it? Then post-acquisition retained earnings, post-acquisition retained earnings, isn't it? So the first one will be subsidiary. In the subsidiary, equal, so remember the percentage, isn't it? 0.8, you multiply by, you open your brackets, the 200 minus the 20, isn't it? The 20 that was pre-acquisition, isn't it? Then also in joint venture, in JV, equal 0.5, the percentage, multiplied by, you open bracket, what was the retained earnings here? 100 minus 100, isn't it? 120 minus 100. 100 being the pre-acquisition, isn't it? You'll find 10, isn't it? Then we have from this proposed dividend, we'll have dividend receivables, isn't it? Dividend receivable. So for the two companies, isn't it? I can just take them Control C, Control V, isn't it? Equal 0.8. I multiply by 40 here, isn't it? The dividend receivable. Then in joint venture, it will be 0.5. I multiply by the 20, isn't it? Then what else am I bringing here? Depreciation, overcharge. Depreciation, overcharge. So what will be the parent share, isn't it? 0.8, because the other one has gone to the NCI. So you saw NCI here. So and the depreciation overcharge was 10. So this one will be like 8, isn't it? Minus, so 10 minus the 2 here and the 8 here, isn't it? Then we go on the other side, isn't it? On the other side here, we have impairment. So remember the impairment of the parent, isn't it? So that's why we were separating the impairment of the parent here, isn't it? You add 12, the impairment that occurred in joint venture, isn't it? Are we together up to there? The impairment that occurred in joint venture. Then you have UPS also. UPS, the parent share, you can see UPS was 10, so the parent share will be 8. Isn't it going faster? Then you have depreciation under charge, isn't it? So the Q, depreciation under charge. So the depreciation under charge, the parent share, it will be equal 0.8. You multiply by, where is the depreciation under charge? Here, the 12, isn't it? Because of the 2 years, isn't it? Then another adjustment that will be here, it is UPFA, isn't it? UPFA doesn't appear in the NCI account, isn't it? Which was 50, isn't it? I think we finished the adjustment, isn't it? So equal sum, rest up, then I'll add everything here. Control enter, control bolt, isn't it? So here, retained earnings to statement of financial position, isn't it? Equal, so I'll take this value minus the sum, you press tab, the sum of these ones here, isn't it? You close your brackets, control enter, 418, isn't it? Control bolt. It is here, isn't it? It's the same thing, isn't it? So the good thing of first presenting Alt HBT, you'll be getting marks as you go by, isn't it? And for the one on retained earnings, you just find out the difference. So let me talk of which side is upstream and which one is downstream. Let me talk of that. So if a subsidiary company sells to the parent company, it is upstream, isn't it? And the vice versa. So if the holding company is selling to the Alt HBU, if the holding company, Alt HBU, is selling to the subsidiary company, then it is downstream, isn't it? Okay, the file will be shared today, I think, because I think we will finish on the last one. On this one is called Uongozi Limited. So I will just read the question. Sorry to be here. So the question reads this way. So you've been provided, so this one is a consolidated, like a group cash flow, isn't it? Group cash flow statement, isn't it? So you've been presented with the consolidated income statement of Uongozi Limited for the year 2013, together with the comparative statements of financial position for 2013 and 2012 are shown below. NDI is 30th September, isn't it? We have the income statement and we have also the statement of financial position, isn't it? And we have some additional information here, isn't it? I told you, the first thing you do, always try if it can be presented, isn't it? Consolidated statement of cash flows, isn't it? Consolidated, control enter, control bolt, isn't it? We always start with operating activities. Isn't it? We always start with operating activities. So under operating activities, we always start with profit before tax, isn't it? So this one you present it as you go by. So you just take it from the statement there, enter, isn't it? Then we'll go, I think, to adjustments. Isn't it? So for the adjustments here, we have depreciation, isn't it? Then we also have impairment. We also have finance costs, isn't it? So we look if we are given any depreciation in the additional information, isn't it? Or we have to calculate it from here. So you can see additional information number 1. You've been given the cost of sale include depreciation of. So you write that one as you go by, isn't it? You add marks as you go. Depreciation 640, isn't it? We add. Another one will be loss on sale of plant, isn't it? Because it is included in cost of sale. So it can be loss on disposal, isn't it? Of 100, isn't it? We add it back because it's an operating expense, isn't it? Then this one, the holding company. So after there, now this one is the procedure of doing it. You come to the statement of financial position. I told you this asset part will mainly come under, I think will mainly come under operating activities. So like you can see, here is 2013 and here is 2012. You must be very careful with the dates, isn't it? So for PPE, you have already removed the depreciation, isn't it? For Goodwill, you can see that Goodwill reduced, isn't it? Goodwill reduced, isn't it? So it will facilitate something called impairment. So remember, Goodwill is an asset. The trick I told you. So if it's an asset, the previous value minus the current value, isn't it? The tip applies there, isn't it? And then when you look at intangible assets, isn't it? You can see that they increased, isn't it? They increased. Then on additional information, I think number 2, isn't it? Additional other intangible asset acquired during the year was 100, isn't it? So 1,000, sorry, it was 1,000, isn't it? So you can see if 1,000 is added to this previous value, this value will be 1,200 and this one will be 940. It means we had amortization. So equal, because it's an asset, isn't it? The previous value plus, remember we are buying new, isn't it? This 1,000, isn't it? Minus the current value, isn't it? Previous value minus the current value. Then, so we've dealt with those two. Then let me see. Investment in associate, isn't it? You can see investment in associate increased. It means maybe we bought some, isn't it? Remember, this one is a group. It's a group one, isn't it? So it means we bought some, it can come under, because there's no additional information on investment in associate, isn't it? It means maybe we added someone or towards the profit, isn't it? And it can be more the profit, isn't it? Because the associate reported a 40% and some impairment, isn't it? It can be the profit. But remember now, this profit will not remove because profit before tax is above it, isn't it? So it's not a factor in here. We only remove what is from profit before tax going up, of which we will remove finance cost, isn't it? Because it's an operating activity. Finance cost. So we add it back. So it will come in as a positive, isn't it? Because we are adding it back, isn't it? Then I think we'll go to working capital changes. So just keep one line. So in case, so working capital changes, isn't it? We'll start with the inventory. We have the receivables, and we also have the payables, isn't it? So inventory being an asset, current. So previous, sorry, so the previous minus the current, isn't it? Equal receivables being an asset, the previous minus the current, isn't it? Then payables being a liability. This one I told you the previous minus the current, isn't it? So the payables, so it would be current minus previous. So just let me start with equal sign. Equal sign, then I'll be back. So here it is, isn't it? So it is remember here it is 2013. So it is current, which is 2013, minus the previous, isn't it? Then I'll be back now here, isn't it? Then I can compute here, tax paid, isn't it? Income tax paid. Equal, so the income tax paid, remember income tax paid is more over, you check, you first check if there were any, yes, you can see we had current tax, isn't it? And it's a liability, isn't it? So we'll start with the current value, isn't it? We less the previous value, and then we will add the current tax, isn't it? So remember this one is in negative form. So I'll change here then to minus, then I take this one so that it comes in as a plus, isn't it? So this one is, sorry, did you enter it correctly? So let's just be back again. So equal the formula I showed you in the other file, the file I sent, isn't it? So the mouse is hanging. So Sorry, I don't know. So here, I don't know why the mouse is hanging. The current value, because it's a liability, isn't it? Minus the previous value, isn't it? Then you add. So this one is added in the. You can add it in the middle. You add. The mouse is not moving, so I'll move it here. You add this one. Then you less the previous value. That's what we are missing, isn't it? You less the previous value. So tax paid must come in as a negative, isn't it? Because you are paying out. Let me check. So incomes from cash flows from operations. So I'll get just the sum of everything. Control enter. Control bold. Isn't it? I will come back to the tax side. So we'll go to first to investing activities, isn't it? So, and if, for example, purposes, if something is not clicking in, just move to the next thing so that you earn the next mark, isn't it? Instead of wasting time, isn't it? So we have, you can see here, we had PPE, isn't it? Additional intangible assets. Those ones we are investing, isn't it? So additional intangible assets equal, so it will be a negative because money is going out, isn't it? Then additional PPE equal to negative 500, isn't it? You are being told on additional information number 3, isn't it? Then so we can use the PPE account because we have not been given the value of the disposal, isn't it? We can use the PPE account to find the cost of the disposal, isn't it? The net book value of the disposal, so that we know the proceed, isn't it? What proceed did we get, isn't it? So here, so PPE being an asset, we start with the previous value plus the, so here we had some acquisitions, isn't it? I told you PPE is affected acquisition, revaluation, and depreciation, isn't it? Plus the 500, isn't it? Then we'll do plus revaluation of 400, isn't it? And also building revalued by 400, additional information number 3, isn't it? So this value will less the current value, isn't it? So that we find that 750 is it, 780, isn't it? And we are forgetting something else, isn't it? Before we less the current value, PPE is also affected by depreciation, isn't it? And depreciation, we are told it is 640, isn't it? Then we less the current value. You'll get it is 140, isn't it? Have you seen how we've gotten here? I don't know why people are at deferred tax. Okay. So we are going back. We are going back to the question. We had forgotten that. That's what was. So thanks the liability. Then repeats on amortization. Okay. So I'll not. So I think here everybody is good, isn't it? Let me just write here some notes, isn't it? PPE account. So because I'll be sending this file immediately, PPE account, isn't it? In other terms, PPE will have the balance brought forward on this side, isn't it? We'll add the additions, isn't it? Acquisitions, new ones, isn't it? Then revaluation will also be on this side, isn't it? Revaluation also. Then on this side, isn't it? We'll have disposal and depreciation, isn't it? Of which now we'll get the balance carried down, isn't it? So just to key in, this one is the previous value, isn't it? Brought forward. So it is here, the previous value, this one, isn't it? So additions, we said we added 500, then revaluation, we said 400, isn't it? Then depreciation here, we said 640. This is what we are doing. And then balance carried down, we were told here, what was it? This one, 3780, isn't it? So I'll do Alt HB R for right border. Then just the same thing, isn't it? I'll find the, so I've put in to the left. So Alt HBN to remove the border, then Alt HBN to remove Alt HBL for left border, isn't it? I'll find the total here. Alt equals Control Enter, isn't it? Here now I'll find the difference, this one minus these ones, isn't it? Plus, plus. So I'll put these ones in bracket so that it works on them alone, isn't it? Then I close the bracket, Control Enter. So it was the net book value of the item that was disposed, it is 140, isn't it? So the net book value of the disposal was 140, and we made a loss of 100 on the disposal, isn't it? Cash proceeds from disposal. It will be 40, 100 minus the 40, isn't it? Then another thing that comes under group is this dividend from associates, isn't it? It can be also the investment. So here, dividends from associate equal, isn't it? So this is where the investment in associate comes in, isn't it? So investment in associate is an asset, isn't it? So we'll take the previous value, isn't it? We add the share of profit, isn't it? Then we less this value here. Enter, isn't it? Dividend from associate. And I think here we'll be finishing. So controllable cash flows from investing. Alt equals Control Enter. control bolt, isn't it? Alt HBP for a top border, isn't it? So the one was saying it was a loss, isn't it? It was a loss on sale. So let me take you back, isn't it? The item disposed had a net book value of 140, isn't it? And we made a loss of 100, isn't it? It means how much did we receive? 40, isn't it? I think there we are okay, isn't it? So what was disturbing here, it is the income tax paid. We'll be back, let us calculate it, because we had forgotten we had also deferred tax, isn't it? We had current tax and deferred tax. So we must add in the deferred tax, isn't it? We must also incorporate the deferred tax, also comes in under tax paid here. So equal, I'll open my brackets. Thank you for the one who said for the correction, isn't it? So it will be the deferred tax. So it is both the deferred tax and current tax are liabilities, isn't it? So it will be this one here plus this one here, isn't it? Then I close the brackets. I add, and because this one here, it is in negative, to add it, I'll start with a negative, isn't it? This one here, isn't it? Then, so the whole thing, so I'll open another bracket. The whole thing, I'll minus now the previous values, isn't it? I also open a bracket. So the previous values will be 280 plus the one in current tax, 320, isn't it? You close your brackets, control enter, control backspace. Is it? No, it is not that way, sorry. So I think, yes. So the tax is added, so it is less. So we were adding your minusing, isn't it? Remember, income tax paid, it cannot be in a positive value because you see it is paid. It's like a cash outflow, isn't it? It cannot be a positive value, isn't it? Cannot be a positive value. So some you just use. Then it's just common. Then financing activities. Control enter, control bolt, isn't it? So I told you financing activities are mostly affected by this section here, isn't it? The section here. Remember, almost everything is incorporated in the cash flow statement, isn't it? So you can see we had a sharp, you can see here they say on 1st 10th 2012, the holding company made a bonus issue of 1 share for every 10 hold. The issue was financed by revaluation reserve, isn't it? So we will take the share premium and the share capital directly just. So issue of shares. Equal. So remember this one, the issue of shares also incorporates the share premium, isn't it? So this one plus this one, isn't it? But there are some ones that were issued. So 1 for every 10 hold. What is missing here is the number of shares. So we must add there the ones that, so I'll press escape, isn't it? So 1 share for every 10 hold, isn't it? Maybe I just confirm the share capital. What was it? Let me check on the question. just a minute, I confirm what was the value. So here. So actually, it is not being reflected. So the shares were to increase, obviously, of which they increased, isn't it? So we'll go directly because the question also was just that way without how many shares were there. So we just find the difference as the shares that were issued, isn't it? So this one plus this one, isn't it? Then I'll close the bracket minus the previous values because it's an asset. I open the bracket. This one here plus this one here, isn't it? Control enter, control backspace. Isn't it? We'll find that it is 1,000. So maybe we'll come to confirm of it. Then we just continue. We also have, so we just go that way. Then we have done here. So retained profit, this one will result into dividends paid, isn't it? To members by the parent company, isn't it? Dividends paid. Sub equal. So the dividends paid, isn't it? So remember, retained earnings is under a liability, isn't it? So the current value. Then we add the profit attributable to parent, isn't it? Then we left the previous value, isn't it? Story. So because this is dividend paid, isn't it? It is like it is being paid out, isn't it? Let me see the entries. So it would be like more of the previous value. So the adjustment here will be negative. That's why the adjustment we are saying can enter in as a positive or negative, because these ones are being paid out. It must be like, it must have just a negative number, isn't it? It must be negative because it is a cash outflow, isn't it? Then we also go to NCI here. Or rather, what you do, always add the value to the balance brought forward, isn't it? Always add the balance to the value to the balance brought forward, isn't it? Let us do that for NCI and see. Equal, isn't it? So for NCI, it is so dividends paid to NCI, isn't it? Dividend paid to NCI, isn't it? So equal to this one, isn't it? Then so we will less this one. Then this one we put in bracket, isn't it? Then we add the profit attributable to NCI, isn't it? Control enter, control backspace, isn't it? So these are dividends paid to NCI, and that one is correct. Dividends paid to NCI, isn't it? Then what else will we do? We just continue with the same thing. So we've done this one, isn't it? Then you can see the debentures. Here is 2012 and here is 2013, isn't it? They increased, isn't it? The debentures increased. isn't it? So if we increase, it means we will issue of debentures. Tab equal. So because it's a liability, it should be the 600 current value minus the previous value, isn't it? Enter. Isn't it? Then I think we have a bank loan, isn't it? You can see that the bank loan here also reduced. It means we paid, isn't it? Loan repayment. Tab equal. So the loan repayment here, it will be this one minus the previous value, isn't it? The current minus the previous, isn't it? Loan repayment. It will be negative because you are paying out, isn't it? So what is remaining? It is, we'll go back here. So the deferred tax, this one we already took care of it, isn't it? Then we have accrued loan interest, isn't it? Accrued loan interest. So for accrued loan interest, it will be interest paid equal. So being a liability, will start with the current value minus, you open your bracket. So I told you it's the previous value plus. So the finance cost here was 60, isn't it? So because here it is in negative form, it will be minus 60. Then you close your brackets, control enter, control backspace, jump to the active cell, isn't it? Then I'll find now the sum here, control enter, control bolt, Alt HB, P for a top border, isn't it? Cash flows from financing. Control enter, control bolt, isn't it? Then we'll have net cash flows. So equal, it will be from operation plus from investing plus from financing, isn't it? Control bolt. Also this one, control bolt, isn't it? Alt HBP. Then what else is remaining? So I don't see anything remaining else. So cash and cash equivalent brought forward. So I just write cash and cash equivalent brought forward, isn't it? So tab equal. So remember, cash and cash brought forward is for the previous year, isn't it? So we had some additional information on dividends paid. So we are cash and cash equivalent. Where is it? Brought forward. So it will be, I started with equal this one here, plus, so it will be minus what? Bank overdraft, isn't it? So cash and cash equivalent. So you can copy here, Control C, Control V, isn't it? Then I change this one here to carried forward, isn't it? So it will be the sum equal this one plus this one here, isn't it? Of which it is 100, isn't it? So we just confirm. And we never had bank overdraft, isn't it? So here, to confirm here, brought forward, it will be equal. Where was it? The 140 here minus bank overdraft, of which we don't have, isn't it? So it is just 140. It means we missed something, isn't it? It means we missed something. So where can be the error be? But it's a very small one of 40. So like I'm trying to see. It's 400. So maybe we will confirm just in the next class because I'm not seeing the error actually. Because these ones are correct. So you have some 20 here to revaluation. The details of retained earnings, maybe we'll, there can be, because we have not used this one. Okay, I think someone is saying it was a loss on sale. No, the proceeds from disposals are very correct. I can't see an error there. The profit from there are very correct. That one must be there. Okay, maybe I'll confirm to you before anything else. You shall confirm. But from up here, from the problem is just here because this additional information actually was lacking something. So I told you that the issue was made at a bonus, isn't it? As you can see in here, we just made with the current minus the previous, isn't it? We never considered the issue, but I think there was something missing actually. But all the same, we shall confirm. I think under time is up. I thought today we could finish on this one. So I'll be sending the file. Let me just, I'll be sending the file over. So I think next class we will start on analysis of financial statement. We'll start with ratio analysis, which are very simple things. So I think by next class, we will cover at least ratio analysis and common size financial statements, isn't it? In the chart? Yes, that one is a good one, Joy. What we need is the concept, isn't it? So I told you the tip here it is, if it's an asset, previous value minus current, and if it's a liability, the current value minus the previous, isn't it? Okay, also the assignment, I'll send the solved part. So I have sent the notes on ratio analysis and also the Excel file, isn't it? Ratio analysis is a very simple concept. The concept you learned in the previous level, isn't it? So make sure by the next class you've passed through ratio analysis, isn't it? You've passed through the file. I sent the original file, now the file that can open, isn't it? So I think for today, the class will end there. And so I don't know. So let me just save the file and I share the file. Provided you've gained the concept, you've seen how it is done, isn't it? It's a very simple thing. So the thing I was looking for here, it was 10 each. Isn't it? The price was 10 each. 10 shillings each, isn't it? So you can find how many shares the company had, isn't it? And this one is on 1st October 2012. So we are still here, isn't it? We're still on 2012, isn't it? So the company will have how many shares? This one divided by 10, isn't it? This is the number of shares the company has, isn't it? And it was giving one share for every 10 hold, isn't it? For every 10, you hold, isn't it? And total number of shares is 100, isn't it? When you cross multiply this, isn't it? It becomes like 1 over 100, so it becomes 10, isn't it? Becomes 10. They gave out 10 new shares. Remember the values are in millions, so 10 million new shares, isn't it? So, and the price also was 10, isn't it? The price was 10. So the shares they gave out was 100, isn't it? The shares they gave out was 100, isn't it? So here, I just want this to balance. So the 100 is added on the, I told you add on the brought forward value, isn't it? The 100, isn't it? There you get 900, isn't it? Then on the dividends paid, let me just confirm again. So on the dividends paid to members, isn't it? So remember, even here you've been given dividends paid in the year 2013, isn't it? How many? 800, isn't it? They paid 800. Remember, the one that goes to the parent alone, isn't it? So the parent has 80%, isn't it? And I think that was the error, isn't it? And you can see the question is balanced. So it was just on the shares and on the dividends paid, isn't it? This one, so it would be dividends paid by parent, isn't it? Or to parent shareholders. Isn't it? So that's the way we do it. Alt HBU, isn't it? I just so the other one there was a check, isn't it? So here I'll do Alt HBT. So I think the class will end there. This one having balanced, I'll send over the file. Isn't it? Merge. So then it was Uongozi Limited, isn't it? Control Enter, Control Bolt. So I think the class will stop there. Let me send the file over to you, isn't it? You compare with yours as you do by, isn't it? Okay, so here it means that we have finished. Yes, the recording too. The recording is always sent by the manager. Here it means we have finished the first one on financial reporting, which is preparing financial statements. So next we go to analysis of financial statements. See you then. I'll be sending the file.